Hey everyone, Starbucks disappointed investors with their latest quarterly update, and that sent the stock price down more than 15% on the back of those results. Of course, unfortunately, coming into the quarter, I did have Starbucks rated as one of my top 25 stocks and a top dividend stock to buy. So I'm going to update that recommendation in this video. So you're going to want to tune in to see how I'm changing that Starbucks buy recommendation. So let's take a look at the numbers first.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Starbucks said global comparable store sales declined by 4%, which was driven by a 6% decline in comparable transactions, offset by a 2% increase in average ticket. You probably already know, if you visit Starbucks, they've been raising prices several times in the last year and a half. It's troubling that an only 2% increase in average ticket led to a decline of 6% in comparable transactions, meaning people are visiting Starbucks less often. They're going to Starbucks less often. Even though they're spending a little bit more on each visit, that's due to higher prices on each item. They're going to Starbucks less often. And that's a bad sign for Starbucks. That's an early signal that demand could be falling back on the back of all those price increases. That could be a sign that customers are finally saying, okay, you know what? $7 for a cup of coffee. Now that's enough. That's my tipping point. I'm not going to go anymore. I'm going to go maybe once every month instead of going once every week for my Starbucks. So it's a dangerous sign. It's a dangerous signal for Starbucks, which had been doing really well in this metric for several quarters and for several years. And the company was forecasting continued growth on this metric. More specifically, China comparable store sales declined by 11%, driven by an 8% decline in average ticket and 4% decline in comparable transactions. So in China, the prices have not increased by as much, as evidenced by the decline in average ticket, but still there is a decline in comparable transactions. China is Starbucks' second largest market outside of the United States, and that part of its business has not recovered as I thought it would recover in 2023 and in 2024. A slower recovery, a perhaps non-existent recovery in that region for Starbucks. Now, the company did open 364 net new stores, and that was part of my reasoning behind recommending Starbucks stock, is that it's still opening new locations around the world. It might have a saturated market in the US, but worldwide it has opportunities for growth, and those locations outside of the United States are less expensive to operate. The rent is lower, operating expenses are lower, including lower wages. And so the opportunity overseas is still quite large for Starbucks. And you could see that with 364 new openings. It now has 38,951 stores, and Starbucks runs on a mixed model. It owns half of the locations and it franchises the other half, or licenses the other half of the locations. 52-48% to be precise in those splits between owning and licensing these locations. This allows Starbucks to decrease the capital intensity of expansion while still owning a good percentage of locations. Now, overall net revenue declined by 2% to 8.6 billion. So despite the fact that it opened many more new locations over the year, its still revenue declined by 2% to 8.6 billion. And all of that led to operating profit margin falling by 240 basis points down to 12.8%. That means the same quarter the prior year, the company's operating profit margin was 15.2%. Management had told investors this was going to move upward closer to 20%. Instead, it's moving down closer to 10%. Very troubling, to be sure. You can start to understand why the stock price reacted the way it did following these earnings results. It was a reversal from previous trends, a stark reversal from previous trends for Starbucks. The earnings per share, meanwhile, declined by 14% to 68 cents. I was expecting growth in earnings per share in the double digits for Starbucks for 2024. I don't know if I'm still expecting that. On a bright spot, the Starbucks Rewards loyalty program, 90-day active members increased by 6% to 32.8 million. This has been a key growth driver for Starbucks. The folks that have Starbucks Rewards are the folks that also have the Starbucks app, and that allows Starbucks to send you promotions, send you emails, and thereby increase its activity, its advertising and marketing activity at a lower cost, because it doesn't need to pay Alphabet or Meta platforms for space and advertising and getting a message across. It can directly communicate to these members. That lowers the cost of promotion. Additionally, folks who order from the app are more profitable for Starbucks, because that means a cashier doesn't have to take your order. If a cashier doesn't have to take your order, that frees up time that the cashier can spend making beverages, and so the company can make more beverages every day compared to where it previously was able to do with the same number of employees. And that's a critical cost savings. Now the wages are rising significantly, especially in the US. Wages are rising, especially in California. Starbucks is now, starting April 1st, having to pay minimum wage of $20 per hour. That's the minimum wage now for franchised restaurants in California, McDonald's, Starbucks, Chipotle included. If you have more than 60 locations, you got to pay your people at least $20 an hour. And so having this app really saves Starbucks a considerable amount of money, because that's lower labor hours it needs to pay for. That was one of the reasons also I liked Starbucks stock longer term, this trend, this tailwind working in its favor. Now, management did not sugarcoat these results, which I appreciated, them being straightforward with investors and not treating investors with disrespect, and acknowledging the poor performance and saying, in a highly challenged environment, this quarter's results do not reflect the power of our brand, our capabilities, or the opportunities ahead, commented the CEO. It did not meet our expectations, but we understand the specific challenges and opportunities immediately in front of us. Boy, is that refreshing to hear a CEO just acknowledge the poor performance and poor outcome and tell investors, look, this was not what we wanted to do in the quarter. This is just how it turned out. We didn't execute on our plan. The macroeconomic conditions did not work in our favor, and this is what it is. We need to do better, right? Very refreshing to hear a CEO acknowledge that. Many times CEOs will come on during a bad quarter and try and take attention away from the actual results and have you pay attention to something else and decline to comment on the performance. But this is refreshing, at least the management team acknowledging the poor performance and underwhelming investor expectations. Now, following the decline, Starbucks is now trading at a forward price to earnings of 16.16, which is the cheapest you've been able to buy this stock for going back all the way to July of 2021 at least. So you're getting the stock at a really cheap valuation now because of that sharp turnaround in its expectations, in its trend lines, in revenue and profitability, comparable store transactions. All of the key metrics seemingly went in a poor direction. So to update my Starbucks stock recommendation, I previously had, as I mentioned at the top of the video, rated Starbucks as one of my top 25 stocks to buy and a top 10 dividend stock. And given these quarterly results, Starbucks has earned a downgrade from me. It's now no longer on my list of top stocks to buy or top dividend stock to buy, but I am keeping it rated as a buy, but I'm downgrading it from my list of top stocks to buy given this poor performance. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.